Good afternoon, and welcome back for those of you who've just joined us for this morning's session. I'm Craig Lembo. I'm the Deputy Director of the Bureau of Economic Research, and I will be facilitating this conversation or this fireside chat. I don't see a fire, but probably appropriate given that the title is Green Finance and the role of central banks. I'm joined by Fundi Tshazibana. Fundi is a Deputy Governor of the South African Reserve Bank, the CEO of the Prudential Authority, and a member of the Monetary Policy Committee, and I thank you. The Deputy Governor leads the Prudential Cluster of the Reserve Bank, which includes Financial Surveillance Department and departments within the Prudential Authority. She is an economist and the Vice Chairperson of the Network for Greening the Financial System. Welcome, Fundi, and thank you for joining us in conversation. I've prepared a few questions of my own to keep the conversation going, and then we will have time to get some questions from the floor and questions from the online audience. But I must warn you that Fundi has a strict 2 p.m. deadline, so she's going to dash out of here very quickly if she's inundated with too many questions. So let me kick off, Fundi, with some of the questions that I've prepared. So the global narrative on central banks, Fundi, and the role in tackling climate change has pivoted over time and more recently due to global politics. How does the central bank perceive the financial risks posed by climate change? And what examples illustrate these impacts domestically and globally?
Thank you so much. It's really lovely to be here. I think maybe in a country, and what are you central banks doing, meddling in the business of government? So we are not the drivers of climate policy in the country. We are not the drivers of environmental policy in the country. All that work has got owners. We have the Department of Environmental Affairs that drives that work. And also we've got multiple structures in government that do work to coordinate. Where we are focused as central banks is to say there are risks that are associated with climate change. There are risks that are related to extreme weather events. There are risks related to deterioration in nature. For example, we all come to Cape Town to appreciate all of the fynbos. If it's not here, do I want to come if I'm a nature tourist? And that has got an economic cost. So this is the way that we view things as a central bank. So why do we think that these risks are worth our time and looking at them? I'm going to give you some actual examples and numbers. So South Africa, we are very familiar with droughts. Once in every 20 years, we would experience a severe drought. Our estimate is that the inflationary impact of that, which generally comes through food prices, would be on food prices, it would be about 10 percentage point impact. And then on overall inflation, 3 percentage points. That we think that would be the impact of that. When we ask financial institutions, and in this instance I'll utilize banks, how many of their credit risk exposures are to companies that might be exposed to climate-related risks, they give us a number that says between 35 and 60%. That's a large number in terms of how the books of a bank might be affected. If we look at the the floods that we experienced in KZN in 2022, the estimated economic costs of those were sitting at about 54 billion rand. I haven't even gone to the insurance-related costs. So you can already see that from a central banking point of view, you can estimate that there are risks. There is a pricing that you can place to those. So when the Monetary Policy Committee sits and there has been a drought, we would start to see those impacts coming through food prices. But what I'm trying to illustrate with giving you these different examples is to say what is different about climate-related risks is that they can be multifaceted. they can have an impact on inflation, they can have an impact on credit risk exposures, they can have an impact on insurance claims, they can have an impact on things like tourism numbers. We saw that in Cape Town when you had the drought. So when we start to look at economic costs, you will have a layer of economic costs that comes to the inflation numbers. You will have a set of issues that have got financial stability impact. So it's not an economic shock like a financial shock where you can say, this is a shock and it's coming through in this way. It's coming in from all directions. So this is how we think about those risks.
So perhaps you could give us some measures that there is. So given these risks, are there measures that the bank has implemented to address the climate-related risks within its mandate?
Sorry.
I'll ask the question again. So what measures has the bank so far implemented to address these climate-related risks within its mandate?
Okay, so as a SARB on the price stability related issues, every 2 months we meet. We look at what has happened to prices and we have to deal with that. So that's a very real one where you have to think about what's coming through and what are you picking up from the food prices that are coming through in the statistical numbers. However, we have had to think about different modeling tools that we would utilize. So normally we use standard macroeconomic metric models. However, with the multifaceted climate-related risks, we have to think about other types of tools. You have to think about how could you use, for example, more general equilibrium models, and could you use more dynamic models because there are multiple areas. We have to think about the data sources that we utilize. So not just the aggregated data, it's important to think about how do you better utilize things like supply use tables. How do you integrate data from different sources? Because in forecasting, you're trying to anticipate. Here, in econometric models, you generally work with the economy that you know. But in thinking about the future could look very different. You've got to think about how do you utilize information from meteorological services, for example. What does that look like and what does that mean? So early on when I was at the National Treasury, I use this as an example because we have learned from each other in terms of different modeling tools. So we started doing work with UNU Wider University, bringing in other economists from elsewhere in the world to help us do this work, working with the Economic Research Center to see what data do you have, what model do you have, and can we have an add-on that links to the general equilibrium model that we've had. So the SARB has had the benefit of exercises like that having developed over time, working with other central banks and being part of the what we call the NGFS, the Network for Greening the Financial System. Within there, we have had a body of work done by the community of central bank on scenarios, and scenarios that help us to estimate potential damage from physical risks of climate change, what they might look like. We have adapted that modeling. So a lot of thinking work has had to happen in the central banks on the how, but it doesn't mean that that has prevented decision making. So if you look at our monetary policy review of October 2023, we have put out there our analytics on what we thought would have been the impact of the El Nino effect on food prices, which would have affected the inflation risks that we were thinking about. So that's that body of work. The second body of work that we've had to do is better understanding the climate-related risks for the financial sector as a whole. And this year we put out our first climate risk scenario, common stress test, where we allow all of the banks to tell us how would they respond to a climate stress test. We're going to progress that to go to the insurance sector. So we're trying to anticipate the risks as they might come. The third intervention has been to give guidance to financial institutions, because this is a new body of work. So the JSE has got a set of requirements in terms of how they would like South African companies to report on their own initiative. We are looking at the risk exposures. Now, the risk exposures do not sit in the financial institutions themselves. They are the risk exposures of their clients, which affect the credit that these financial institutions extend, which affect the types of claims that they might receive on the insurance side. So we then set out a guidance to financial institutions to say, go and talk to your clients and start collecting that information from your clients so that you yourself can understand the risk exposures. And so this is the guidance that we have provided. And South Africa is also a member of the Basel Committee on Bank Supervision. And there is work that has been underway, which is global work, to help us to get to a common reporting practice for banks on what are the types of disclosures that they need to start to make over time. And it's important that we get this work done because it's not just for the South African Reserve Bank to do this work, but also yourself as the academic community and other policymakers to say, this is the information that is out there and publishable, and what is it that we can learn from it? Because that's an important part of the learning.
But we also part of a global community in this sense, and part of a global initiative to understand the impact of climate change and where central banks need to be involved. And you've mentioned earlier on the network for greening the financial system. Perhaps color that in for us a little bit around who's involved, what is the primary mandate, and I know you also have a very particular role to play in that body.
Yes, so the network for greening the financial system was set up in 2017. It's just a community of central banks. It's central bank employees, all of us, but it's a community of the willing. It's not a structured organization. It's not like the IMF. We've banded ourselves together to do work around these climate-related risks. And we wanted to improve our understanding and to share experiences between ourselves. And we had some willing central banks that were well-resourced that put together a pot of funds so that we could get a group of experts to better understand what we were dealing with. And out of that work, we then developed long-term climate scenarios to say, this is what things could look like in 50 years' time, because all of us were scrambling. We didn't have work to start off with. And these climate scenarios have actually been very helpful for all of us. We then have progressed this work to then say, okay, these long-term climate scenarios are useful, but actually for monetary policy purposes, you need something that's more short-term. And there you need to model differently in these different types of information that you needed. And so we now have short-term scenarios. We also, as central banks, have got elements of our work that relate to the supervision of financial institutions, and a body of work was needed there to refine that thinking. And so we set up different work streams. One was on supervisory practices. And as that work was being developed, it then enabled the standard-setting bodies to then say, oh, the NGFS has done this work, it's useful. Let's start to think about the types of standards that we might put in place so that there is a universal way of reporting, and how do we think about taxonomies so that all of us are using the same language. And then the third pocket of work we were doing was for the central banks themselves, because central banks, in addition to policy making, most of us are manufacturers. We don't talk about the fact that we have got manufacturing subsidiaries. We produce currencies. And so we emit, and we've got to think about materials and what we're doing there. And so in terms of those businesses, we as central banks had to reflect on how do we become cleaner and greener too. And then lastly, in terms of things like things such as the reserve management function of a central bank. So reserves management is not just about cash, but this is based on instruments. Are we investing in greener instruments as part of our investment portfolios? So this was the body of thinking that we do together as a collective of central banks in the network for greening the financial system. But to deepen understanding, some of us are further ahead than others, so there's a teaching level as well, capacity building as we're learning multiple platforms. But the information produced by the NGFS is public, so you can all go to the NGFS website yourself to go and say, what is the repository of information on different things. Some of the work that we've done has been useful also for national governments to say, well, when we think about climate finance, what could it look like? Is it purely just private sector or purely just public sector? And we did some work related to what we call blended finance. How can you mix different financing tools as a country in order to further your climate ambitions? So this is the type of work we've done in the NGFS.
And I think that's a fantastic angle to look at it, is in terms of the financing aspects and the investment aspects. Because outside of it, sort of promoting a move towards a greener economy, it in itself can be a boost to the economy through the investment that comes through in that sense. So it's a nice double whammy in a way to get things moving. I want to talk a little bit about the scenarios. So obviously what you publish in the MPC is your sort of baseline forecasts, all things considered, all things that we know and don't know at the moment. And we also at the BER do some scenarios. And I'm very interested in the climate-related scenarios that you mentioned around two particular points and what they look like. Is there a best case scenario? Is there a worst case scenario? Are we seeing Armageddon in 2 years' time because of whatever climate disaster has prevailed? And what does that mean for global economies, or the South African economy, and the financial system in particular?
Yes, so when you look at climate scenarios, obviously you'd have different scenarios. So your best case in climate, when you look at climate-related risks, would say the following. It would say the risk is there. It will happen. But you can mitigate the risk, and then you can think about, if the risk does materialize, how do you adapt to the risk? So it's those types of things that you're thinking about. So you'll see in the climate scenarios, we talk about orderly management of risks and disorderly, because that's where your worst case scenario looks like, is if things are disorderly, if we are all denialists and we say, well, there's no climate change, and therefore I don't have to do anything, and so there are no mitigants in place, and we don't have strategies for adaptation, meaning when the risk arises, we're all scrambling and we say, oh, this is what has happened. We saw in South Africa how those types of risks could materialize, because when we had the floods in KZN, we had a number of things that were there. Okay, the insurers could manage their piece because nothing broke the bank. But we realized when we had to look at actual funding mechanism, so a bridge. So there was a bridge here today, but there's no bridge tomorrow. Let's assume that a municipality is responsible for fixing the bridge. The municipality looks, we don't have money. Okay, fine. So we go to the next layer. We go to the province. Is the money? The province says, oh, even we don't have space. Then national government has to step in. We were very lucky because national government has got provisions that they could utilize. But this was just a small part of one province. Imagine now if this is happening across the country in multiple ways, would we be able to manage? So it does give us things to reflect on. Then the disorderly scenario then comes with extra layers of other economic costs, because then what happens is that the opportunity costs will become larger. Things that you were supposed to do, because you now have this situation that is urgent, you get this displacement. So this is how you think through the scenarios. We're very humble as central banks in this space. There's a lot we don't know. So the scenarios are very qualitative, and we're refining as we're moving along. So when the NGFS started this work, some assumptions had been made around what the damage might be from physical risks. We've now updated the work. You'll see there's a different damage function that shows that the damages might be a lot higher than we initially estimated. Then there are transition issues. We also know that, so if we're talking about transitioning to net zero, there would be some sacrifices that come along the way. So when the OECD was presenting here earlier, they spoke about what happens. Let's assume we want to have cleaner air quality in one area. And we were talking about one coal-producing area to say, at a national level, the impact is small, but at a provincial level, the impact is larger. How do you think about the transitional issues? And so the transitional issues will have different impacts. So there's the economic impact, but let's assume those coal mines are also clients of banks, and the banks have lent the money. So if the coal mines are going to be out of business, that means the bank has to understand, this is my risk exposure. This is my risk exposure from an entity that will be out of business soon. This is how I must price my credit to this entity so that I don't sit with bad debt on my books. If this was a large depositor and I was relying on these funds from this entity, I've now taken the funds from the mine and I've lent them to Louise over here. And there's a mismatch between when will the mine be out of business or the drawdown that the mine might have because they're now getting out of business, they'll start to reduce the deposits. How do I manage my mismatch in my portfolio between the two things? So they are those technical things that you've got to think about. So the extreme stress test tries to look at some of those issues. What are the physical risk issues? What are the transitional risk issues? And what happens if you have an orderly scenario or a disorderly scenario? And then there'll be scenarios in between. I hope that helps you. But it's largely qualitative because there's just so much that we don't know. So we must be humble and we must learn as we go.
And these scenarios you obviously share with the commercial banks as well and the insurers to give them a sense
public.
of, yeah. I think one thing that stands out when you're speaking about the finance sector and the insurance sector is, in the case of the KZN floods, for example, we know there was a number of businesses that weren't insured, that weren't part of the formal insurance sector or the formal banking sector. And those implications could have real economic risks, although not through the formal financial sector. Have you thought about those instances? Have you accounted for those components within the modeling and scenario framework?
So you can't fully. But as part of our G20 presidency this year, we have requested the International Association of Insurance Supervisors and the World Bank to do some work around these insurance protection gaps. Now, insurance protection gaps will arise for multiple reasons. One is the individuals are not covered by an insurer, meaning they are self-insuring. The second way in which insurance protection gaps arise is you were insured and then your insurer decides the risks are just too many and there's just fine print in the language, and then you discovered you thought you were insured, but you're no longer insured, as was the case with the electricity risks. You might recall there was a time in which there was this controversy where insurance companies said, but we can't cover you against a grid failure in South Africa. So an insurer prices you based on mitigation of a risk. If they think a risk is not mitigated, they can't price the risk. This is how insurance works. So that could be another way. And then the insurers themselves, the domestic insurers, must then get reinsurance, because if the risk is here, they must get reinsurance from another insurer that is outside so that they smooth the situation. But if the reinsurer thinks the risk is way too high and they stop giving insurance to the domestic insurer, that also affects coverage. So that is the body of work that we are getting done so that we can understand insurance protection gaps. Now, if there is no insurance, government is always the insurer of last resort. What does that look like? I gave you the example of a bridge. What does that look like? Are we ready for that? In some regions, we have seen groups of governments or regional governments pulling together to say, we are going to have regional risk pooling arrangements to try different things. But this is the body of work that we're doing as part of our G20 presidency, and we'd like to progress this work because this is necessary work that must be done, not just for us as a central bank, but also by government itself, so that we better are able to manage the risks.
Thank you, Fundi. And I want to change track just a little bit to talk about work in the broader policy space. Now, you've identified and you've provided the disclaimer that everybody's got their job to do and everybody's got their focus area, but there are aspects from a broader policy perspective that could influence the positive movement of greening the economy and greening the finance sector. If one looks just at an example at the IRP, the Independent Resource Plans, in 2019, the plan was broadly accepted as being pro-renewable energy, and when we came to the 2023 iteration, our good friend coal made an impressive comeback. And of course, you look at the scenarios, and implicit in that is trying to peg certain probabilities to that. And we know that we added to that a sort of global narrative, which is muddling the lines a little bit about pushing forward with the green transition. Where can the bank play a role or whisper in an ear that this is not sort of appropriate in terms of promoting a green energy agenda?
So I gave this big disclaimer up front so there's a continuum in climate policy. We are in conversation. So government does have multiple structures in place. We are in conversation in terms of intergovernmental working groups on sustainable finance. There is one. There is the Presidential Climate Commission. So we are in conversation often. But as we are in conversation, we have to understand that the different choices must be made in different parts of government. So as I was listening to Vuyo earlier, and I was listening to just commentary that we were making around policy implementation, we've been far ahead in terms of our understanding of climate and environmental risks in South Africa. So we hosted the Conference of Parties under the UN Convention, Climate Convention. When was that? When was COP 2017? 2011. And at that time, we were actually leading in our thought process in terms of what has to happen. We had conversations around emission budgets that we needed to have for different sectors. The Treasury was starting the work around the carbon tax. So there are these frictions that arise. And I think we've had this appreciation in knowing what was the problem going to be. You highlight the IRP issue. So we've been discussing for a long time the issue of diversification of primary energy sources and the need to go cleaner. And we identified early on where our problems were. So we had Eskom as the largest emitter and Sasol as the largest emitter. Just dealing with those two firms, we knew already these things. So it's about how quickly you move along, but it's also about how you think through these just transition issues. So the Presidential Climate Commission is getting to these issues, but it's slow grinding in terms of how do we get there? What does just transition look like? What does it mean for us as a country to be getting out of coal when you now have additional coal deposits that you've discovered and you want to now be moving that coal above ground and exporting it? What are the types of things that you have to think about? And that is the conversation. That is the hard conversation. And that gives a lot more color to what the structural discussions ought to be. So most of the time we talk about structural reforms as things that don't have a face. But these are the things that's about how do we transition out of coal? Who is employed in the coal sector? Some of the things that the OECD is trying to lift up in the work that they're doing. Who's employed in the coal sector? Are those people trainable? Could they move to another sector? What is the type of government intervention that's required? Now, that discussion is more than about environmental policy. It's more than about climate policy. It's about your labor policy. It's about your industrial policy. It's about your mineral policy. It's about everything. It's the whole continuum. So the climate discussion is about the country being able to situate itself to say, this is where we are. These are the risks that we're exposed to. We want to move from here to here. And this is what all of us have to do in the heavy lifting. Central bank has got one way in understanding the risks, but there are these other parts of government that have to do that work. I hope that helps you. That's a roundabout way of getting there to say, you need more than one department to be thinking about what does it mean to deal with and manage these issues.
No, fantastic, Fundi. Thank you. I'm going to finish off some of my questions so that there's enough time for us to engage also with the audience and with the online audience, and particularly for the audience here, which consists of quite a number of academics. And you highlighted the fact that this body of research is still quite new. Where do you think the academic community, the research community can play a role and inform the thinking around this particular topic for the Reserve Bank, but also for global central banking?
So I think the academic community has actually been at the forefront of the thinking. And we've had to draw on the academic community a lot in our work, both globally and domestically, to say, well, what are the types of conversations that you need to have with the Economic Research Center? Because at the time that the work was starting, we knew very little. We had to say, who are the people that are just doing this work and thinking about this? And how do we get the economists to sit with climate experts so that the economists are able to understand and extract what we need to get from them? And then we also, I studied environmental economics a long time ago. But as you are having these interactions with universities, it helps you in your thinking about, well, how do you think about something like a carbon tax? And what does it mean in terms of the fiscal framework? Because you need a group of people that don't have a vested interest to tell you this is the first best solution. Then you as a policymaker can come in and say, okay, I understand now the first best solution. I need to worry about how do I sell this? How do I sell this so that it can become a part of a policy narrative? And what does that look like? How do I think about, how do I build the understanding of the political layer, even though I'm not the politician, because some of the decisions are made in that space? And how do we think about political economy trade-offs? So those are the types of things. But we've relied quite a lot on the international community. I've highlighted in the Network for Greening the Financial System, we had to also bring in a group of experts who are just doing this work to assist us too, because we all have day jobs as central bankers. Now, if you have a day job and then you moonlight on this side, you need someone who's just focusing on this core so that they can enable you to have the conversation.
Thank you, Fundi. At this time, let us open the floor for questions. We'll take 3 questions from the audience in person, and then we're going to take 3 questions from the audience online that Sophia is going to read out for us. So I see there's a hand here in the brown jersey. Please introduce yourself, and then you can ask your question. Is there a roving mic on that side? We'll take 3 questions, Fundi, if that's okay.
Yeah,
and then
that's okay. That's okay.
So in the brown first, and then the gentleman at the back.
I have my question written down. Hi, Deputy Governor. I'm Cara. Nice to meet you. So my question is, going into this G20 that we are assuming the presidency of this year, how is SARB planning to shape or support conversations happening at that level on greening the global finance system?
Hello. Hi, Fundi, and nice to meet you, and thanks for being here. My name is Nick Rowley from Green Asset Exchange. We Africa's only marketplace for environmental attributes, carbon credits, renewable energy certificates, and we help create new financial instruments to unlock the green sector. The South Africa has had a carbon tax regime since 2019, which I can sound you very familiar with. What we have recently seen is somewhat of a miscommunication between Treasury and the Reserve Bank. And currently the Reserve Bank has blocked all cross-border carbon transactions. So, this industry has the opportunity to be a huge green stimulus, creating many jobs for South Africans and changing our infrastructure. But if we are unable to get investment into the country or remove carbon credits, and this has been done without any prior engagement many years into the current regime, the Reserve Bank is currently the biggest obstacle to the green transition. There are 4 or 5 different government departments that all play their different roles in this. But if the Reserve Bank has stopped the way in which these things can be financed or these assets can move, it's billions of dollars of industry that has essentially been ruined without any communication. So maybe you can give some comment to that.
Mm-hmm.
Thank you. There was a hand in front. Remy.
Hi, Fundi. Thank you very much for the talk. I really enjoyed it. I was just curious to maybe follow up from the First Lady's question. I was just curious, how does SARB deal with the challenge of climate policy reversal, which is taking place globally, charged by some of the governments?
There was one other hand, Remy.
You can
There
take
was,
one more.
yeah, there was one other hand before we give Fundi an opportunity to respond.
Yeah, thank you. So I'm Caleb. I'm not really an academic or an economist. I'm an auditor specializing in renewable energy. So I deal with a lot of companies like this. And so my question isn't going to be super high level academic. I just sort of wanted to get a view on what the Reserve Bank's sort of background conversations are regarding the sort of, I guess you could call it a mismatch between the way the transmission lines currently sit, right? A lot of it sits in Mpumalanga, and renewable energy, the best resources in terms of wind and solar and whatever sits in other parts of the country. So this sort of transition, I would just sort of like to see what the Reserve Bank is considering in terms of the effect, in terms of things like job losses and how we sort of get the infrastructure right to actually get the energy where it needs to be.
Whew.
Better you than me.
Okay, I'm going to start with the climate policy reversal. So I think one of the things that you learn early in your life as a central banker is to stay in your lane and to not pronounce on global politics. But every country has got its sovereignty and rights to decide that this is what we're going to do as a country. I think that it's useful that one thinks about the US, because we're talking about the US in this way, in conversation. The commentary is around climate change. Should we be calling it climate change, or should we talk about weather-related risks? Now, I don't get too fixated on terminology, because if we start to look at terminology, then we sort of miss the stuff in between. So if I talk to my US counterparts, because I'm also a supervisor of insurers, the insurers are dealing with the risks that they're meant to deal with. If you listen to what Chairman Jay Powell has said, when he's been in Congress a couple of times, when he's been asked about these issues, he has said that the US recognizes that there are risks from weather-related events, but in his view, that is not a mandate that sits with the central bank. It sits with other agencies, and there are interventions that those other agencies are putting in place to deal with and manage the weather-related risks. So I'm not going to quibble with the US in terms of the choices that they have taken. So in terms of the broader global conversation, we still have got signatories to this UN Climate Convention. We still have COP conferences that go on where there is still commitment. So if we think back to 2017, in 2017 the US decided at that point in time that it didn't want to get involved on anything related to climate. And when you get different administrations, there are these preferences and choices that come through. We then had a different administration, and the US had a different pivot. So in the work that we are doing with the body of central banks, I think that there is broad recognition that there are climate-related risks and that the risks must be dealt with. There might be differences in nuance around the terminology. The biggest test globally will be to see that when we have the COP later this year that is happening in Brazil, is the posture going to change? But there are global commitments that have been made and funding that is happening. There are conversations that are happening, including at the level of the G20. We might not agree on everything, but there are the agencies that need to deal with issues are dealing with the issues. So how we all get there might be slightly different, is my roundabout diplomatic way of dealing with the question. Let me turn to then the G20 presidency and what are we doing as part of the G20 presidency. So in the G20 presidency, we've had to think about sustainable finance from a number of facets. One, we're doing work on adaptation finance. And why have we selected adaptation finance rather than climate mitigation finance? Is that if we look at emerging market countries, the bulk of the issues that they have had to deal with are adaptation related. And there has not been any funding globally that has been readily available. So the bulk of countries are dealing with adaptation issues from own funds. So the conversation that we are curating at the G20 is to say, how do we think about the role of the private sector? How do we think about the role of multilateral development banks in adaptation finance? How do we think about these vertical climate funds like the green climate funds that have been set up? What are they doing in the space of adaptation finance? I spoke earlier about the work that the Network for Greening the Financial System has done on blended finance. But basically that's the conversation that we're curating, is that there might be space for a blended finance approach to dealing with adaptation. So how can we think about it? And how can countries think about what are the types of things that they have to do to be able to get access to different blended finance? So that's one type of work that we're doing. I mentioned also the work on insurance protection gaps. That's part of our G20 plan and mandate that we're discussing. And then we are also discussing transition risk and transition issues as part of our G20 presidency. That's what we have prioritized. Nick, Now Nick is asking me about my day job, which is very... So Nick, I don't have an exact answer for you because I do not have the exact information in front of me. So what I will say is that normally, if you've got something new that comes up, because the financial surveillance framework and the exchange control framework was designed for the economy as we knew it, right? So if you go through a bank to apply for a transaction to go through, there's usually some changes and regulation issues that we've got to nuance between ourselves and the Treasury. Sometimes that is the reason for the delay. Sometimes the reason for the delay might be the transaction itself, that it looks like something else. So I don't have an answer for you, but I am noting, Nick, this specific issue that you're highlighting. I can't give you an answer now because I don't know. I have to ask my team on these types of transactions, why are you blocking them? I don't know. But you're welcome to retort and tell me more.
It's been around for 2019. Transactions have been happening. But now to blanket stop them, you're stopping investment into the country, and you haven't given a reason, and it's also just before our carbon tax year in July, and there hasn't been any communication with the market about this. It's just
So this
all
is
of
a
sudden
new
happened.
thing, Nick.
It's happened this year, yes. And
Okay.
so, I mean, maybe we were just the first trying to push the transactions through,
Okay.
that now we've discovered this. And we have been engaging with both the Reserve Bank and Treasury regarding this.
Okay.
But I mean, these have huge implications, for investment in the country, for renewable projects, for carbon credit projects, for jobs. This could be a the beneficial thing for South Africa. We could be a huge net exporter of credits, which brings a lot of foreign direct investment. And I could understand it a little bit if it was just one way. Let's say it was money going out. But it's not. It's blanket in and out.
Period.
And it can't just be, stick your head in the sand like an ostrich and say, okay, well, we don't know what we do about this right now. Because the frameworks are multi-governmental through many departments. But the Reserve Bank is currently derailing the entire industry.
Okay.
Yeah, I think the governor has noted that, and I think that's the best person to give a stern look at what is happening underneath. There is.
Oh, there's one more. Well, Nick came here requiring an answer, but Nick will find an answer for you. Find Matlazi and give Matlazi your details. We will follow up on your behalf. That's the best I can do for you. So Caleb, you spoke about transmission lines. Yeah, you should be asking Vuyo this question, not me. So Caleb, I did this work a long time ago. So 25 years ago this year, I was at NERSA. That was such a long time ago. But this issue around where the transmission lines are and where the energy is going, right? So you end up with things like transmission losses. And these are things that I think have to be thought through by the national transmission company, because it's not just about climate. It's also about just the overall cost of electricity and matching where your production is going to be, because that's also changing. So as you think about what will wheeling look like, where the customer's sitting, where's the energy sitting, your energy mix will also have an impact on that. But I think that as we think about this from a physical risk point of view, I think the planning around where the infrastructure is built relative to where the transmission or where the climate risks are going to be, and the maintenance of that path. Because if there is another weather-related disaster and half of our transmission lines are wiped out, so it's more about business continuity and the types of risks that might emerge over time that need to be thought about, in addition to this matching of where the transmission lines are. But I agree with you, it's an important issue for consideration.
Thank you, Fundi. There aren't any questions online. But
Sorry, is this? There are two comments. The one is someone that tries to convince us all to buy cryptocurrency, but then there's also, but then there is also someone who says the deputy governor can outperform any AI model on economic issues. So there you have it.
not plant that comment, Fundi. Just that's why. One last question, because we are mindful of the deputy governor's time at the back.
Yeah, we can do two more, three.
Okay, two more.
Two more.
Let's do two more if there are.
Yeah.
Two.
Thank you very much. My name is Andrew Guild. I'm a climate change lawyer. I led the private sector team that drafted the Climate Change Act. So the Act puts very, very significant economic power into the hands of the Environment Minister. Has the bank thought about what the consequences of that might be across the economy and for policy?
Hi, I'm Nadia. Again, for those who didn't hear my introduction earlier, I'm at the Bureau of Economic Research. Vuyo, I believe I must take you for coffee after this because I hear you and Timmy had this conversation yesterday. But Deputy Governor, when I hear people from the SARB speak, I go, oh my goodness, thank gracious, I don't have to worry about it because the SARB is on it and we trust the SARB. The SARB is credible. The SARB is one of our standout institutions in this country. My question for you is, you've spent time in National Treasury as well. You spent time outside of the SARB. Do you have specific learnings from the Reserve Bank that could be applicable elsewhere, where we could get the same kind of quality of work, the same kind of forward thinking? I know central bank independence is a key driver here. You don't have to deal with the politics. But are there other things that you think might be applicable across the context? Because context does matter, but do you have any learnings, advice for how we get this kind of good governance elsewhere? You and I will discuss over coffee as well.
If there's another hand. Okay, there is an online question as well, and then we'll finish off with the questions.
Right, there's one question online, and it is, how can the South African Reserve Bank integrate advanced quantitative risk models to evaluate and mitigate climate-related financial risks, such as those arising from fossil fuel exposure?
Okay, so data is the biggest impediment that we have as we're getting this work done. And it's something that you're going to hear about a lot as we are having discussions on climate. It comes out not just here in South Africa, but across jurisdictions as well. All of us are aggregating. So we as the Prudential Authority have said, know your customers, financial institutions, and collect data from them. When some of the financial institutions arrive, the entities don't know enough. So I think that large firms have started to collect data, but SMEs are not going to be none the wiser. So there is collective thinking that we're doing across central banks, learning from each other in terms of how are we doing this data aggregation to say who has data. Insurers have got some data, but we learned actually during the 2021 riots that actually they had some data, but maybe it's not disaggregated enough, because when you're dealing with the risk, you need to know a locality. So if I'm talking about a bank, how many ATMs do you have? Where are they? Can I geolocate them? Who's owning that type of information? And could we pull it into a space that this becomes a natural resource? So it's part of the debate that is happening. And so we are thinking more and more about data collection and will there be benefits if the data is aggregated? If it is, how do we think about privacy issues? How do we think about competition concerns? If we're all dipping into the same data pool, how will we utilize the data? Would you be comfortable as an individual if your insurer has provided information to your bank and your bank denies you a bond that you wanted? They've now seen that the house you wanted is in an area that's not covered by insurance. Then we skew where people live. What does that look like? So it's those types of things that we all are applying our minds to on some of the data issues. On the powers of the environmental ministers, Andrew, it's not something that we have looked at. As I said to you, we've endeavored to stay in our lane so that we stay out of trouble. It's not so easy, but I hear what you say. I had not noticed that, by the way. So Nadia, what are the learnings? And this is a very difficult one for me because I grew up at the National Treasury. I grew up at NERSA doing different work. When I started working at the Treasury, you had a bunch of young people that just had drives. We dug. We worked our butt off. Some of the people are here in the audience. We worked extremely hard to get the work done. And so for me, the lesson from the Reserve Bank that I have is as follows. When you have an institution that has got a focused mandate and you leave the technical work to be done and you have targets and it's very clear what you're working towards and you have got mechanisms to account, that is the difference because you are not working over and over again. Now, we have an inflation target, and every second month the MPC must meet, a decision will be made. Even if the decision is, we're doing nothing this time, we're keeping rates on hold. That is a decision, it's communicated, it's known, the objective function is known. And I think this is how we should be thinking about measurement and accountability over time, and this is what also came up as we were having the discussion with the OECD giving us feedback, implementation. We said we would do these 5 things. It would take us 5 years to do these 5 things. It doesn't mean the path is perfect, but we should be accounting on where we are. The milestones should be clear, the milestones should be known. The professional work should be done, advice should be received. If you do not accept the advice, you must say. And this is what the MPC has to do. So the governor always says, we have a quarterly projection model and it votes first. And we publish for you what has the quarterly projection model said, and you see that. And then we get interrogated as the MPC that there was a path, why didn't you follow the path? The humans must then answer to say, well, we knew better than the model because the model can't do this, and the humans on the MPC are able to do the following things, and this is what we saw. Even if we have to say our measure is qualitative, that measure that's transparent to you is quantitative and you can see, but there's an accountability mechanism. And I think this is the important part. And there are parts of government that are working extremely well. So I have a fondness to the Treasury. I've disclosed that this is that there are hard-working men and women out there that are delivering. They need the support. We need to narrow the requirements and the mandate. But what we can't do, and what officials can't do, is make choices that are meant to be made by political principles. That's not what we can do. This is what the objective measures are able to help us to do, so that the officials are able to say, this is the advice that we give. The other side must then take the advice and say, this is what we're going to do with it, and then we figure out how to account, and this is how far I can go as a central banker.
Thank you so much, Fundi, and thank you so much for a fascinating discussion and for spending time with us and for unpacking the elements of green financing as seen by the South African Reserve Bank, even though we know the conversation is still ongoing domestically and globally. So we've arranged for a small token of thanks, Fundi, for you to take back home. And looks like it's a mug of sorts that you can present at the Reserve Bank on your desk.
Declare.
I think
declare at the Reserve Bank.
The budget was tight, so we've kept it below particular thresholds, and then also to the team from the OECD to say thank you for you, Lela, and for Louise also for joining us here in Stellenbosch. And then with that, I also want to thank everybody for attending today. A special thanks to Amira for running around and making all the arrangements from the faculty side. We did give her grey hair, she's hid it well, but they are there somewhere. And then also to Sophia du Plessis, the chair of the economics department, who took the initiative to put this together, and this morning/afternoon together for us, Ina also in her absence for doing the administrative work, and then from the BER side to Roy also, who gave me some grey hair in putting all this together, but we are grateful. I think it was a fantastic discussion. We'll keep this discussion live, and I know Fundi is always open to comments and questions around these topics, and as our non-placed YouTube comment, these are not AI answers, these are the answers of an expert in the field that we are fortunate to have at the bank. Thank you very much, and let's give her a round of applause.
Okay, well, thank you so much. And I need to do these. Yeah, that's okay.